Hey there, it's time for the show, the Tatiana Show, where you make friends and talk life and crypto. Hello, everybody, and welcome to the Tatiana Show. Today, we're going to be talking about DeFi and different options that are available to people that are maybe a little bit more risk averse, a little bit riskier. There's all different kinds of options. I've been learning about this platform called SmartFi. We've been working together on their launch for quite a while now. And I don't take on a lot of projects with my marketing company because I think a lot of projects in crypto are kind of sketchy. But this project I thought was really, really interesting. And what I liked about it was that I think that it can bring people to crypto that are not necessarily the regular old people, but I think it also has something for OG crypto people. So I'm very excited now that we've had the launch to be inviting on Aaron Tilton, the CEO of SmartFi, to talk to us a little bit about what they've been doing and a little bit about his background, because I think there's a lot of interesting things happening over there too. So thank you, Aaron, for joining us on the Tatiana Show.
Thank you.
Awesome. So tell us a little bit about what is SmartFi and how you got to that point where you started creating it. Because I know there's a little bit of background, but really quickly, what is SmartFi? And then tell me a little bit about how you founded the company.
So SmartFi is a kind of a unique monetary system for cryptocurrencies. It's an open lending platform. And we've been in the business now of lending against cryptocurrencies for about 4 years. And before that, as a company, we built energy infrastructure. So we were developing power plants and we built oil and gas pipelines. So we built a lot of critical infrastructure for the energy business. And kind of the unique aspect of how we got into this is we started looking at cryptocurrencies and noticing some similarities between the volatility in energy and cryptocurrencies. So we took some of our experience from the energy business and applied it to the funding of cryptocurrencies, not just the currencies themselves, but actually businesses.
What kind of businesses?
We funded a lot of interesting businesses, one of which was silicon chip capacity, ATMs, crypto ATMs, private jets. It's really the hours that you can buy on a private jet. And just, in fact, we funded companies where we're not even sure what they do, but they've given us cryptocurrencies, we give them the dollars, and we don't ask questions about, their unique details. But usually we've done real estate, we've done a lot of different normal kind of business that you would see kind of quote unquote the real world, right, outside of crypto.
Right, because you guys had a lot of experience in the real world doing a lot of different kinds of activities before you got involved with mining and energy for crypto stuff. You guys have now expanded to doing retail business. Can you talk a little bit more about what is SmartFi? Who is it for? Who can use it? How can they use it? Just something to give somebody who's unfamiliar with the project a general overview.
Yeah, I mean, it all kind of started a little bit with when our own personal experience, when we started using crypto, started lending against crypto, we noticed there were some things that were really good about it, some things that were really difficult about it. And that kind of informed our process about who we think would benefit most if certain things were to change, if it became easier to use, if it was, had more safety. I think, a lot of people, just the normal average person walking down the street has heard of cryptocurrencies, but they don't really know what to expect. They're not even sure how to use it. If you're not fairly technically savvy, it becomes difficult. So we took that kind of approach and said, if we could expand this to the average user, what changes would we make? And that's what's informed what we do with SmartFi. So some of the changes that we've made in terms of our structure and what we do is the platform, when you log in, you're going to see that the calculators are pretty easy, pretty simple. Also, the structure behind lending, it has to be very similar to what people are used to. And so we've done that as well as made it look like or feel like what you would normally see at a bank, or at another lending facility. but it's just crypto related.
Okay, how is this different from any of the other kinds of lending platforms?
Well, one of the first things is that we start with a kind of security or safety in mind, right? So we have in our structure, we have actually our own stable coin. We also have a speculative coin, but we also take mostly cryptocurrency in the form of like Bitcoin or Ethereum to lend against. And in what we do, the difference is really, think of it more like this. If you could own a small little piece of a bank, when you buy SMTF coins, that's actually what you're doing. You actually can participate in owning what actually lends you money. That's very different, right? You don't get to go in and ask Wells Fargo unless you want to buy their stock, but then you don't directly own structures around it, or JP Morgan or something like that. So our structure around this SMTF coin allows you to participate in the upside of what normally would be the bank's profitability. You get to participate in that, as well as you get to have the liquidity of your own coin or your own dollars back to fund your own business and whatever you're doing.
If somebody is unfamiliar with financial markets, right? So I got into crypto and I didn't know anything about finance. I didn't know anything about crypto. I did know some stuff about Austrian economics. You have a product that's called SmartFi. I think I'm smart, but I don't think I'm very smart with finances. So how have you guys made it easy for the average person to do that? Is it something that where you have to learn a whole course of different options? Because even lending, like I've seen for different platforms, was a new concept for me. So how do you solve that problem for regular people who aren't really even thinking of that?
So if you were to go to our platform and looked at getting a loan against cryptocurrency, you would see a little drop down button that says, it gives you 4 options about what's most important to you. In fact, I think that's what the question says. What's most important to you? To maximize your cash during the time of the loan, to minimize your interest, to minimize the possibility of a margin call. A margin call just really means there's the amount of the value that you put up in crypto versus the dollars that you get. If the value of cryptocurrency goes down, then you have to put more cryptocurrency in to secure your loan. And so if you want to minimize or maximize one of those considerations, you just select which one you want. And then it automatically adjusts your loan to consider that as the most important feature of the loan that you get. That's how we make it simpler, so that people usually what we found out is over the time, several years, we were always answering these questions from people saying, gosh, what I need more money available. I need the most I can get out of it, because for some 6-month period, I'm going to be tight on funds with my business. So we would always have to educate them on what that meant. And now we still educate them on what that means, but they just select the button and then it changes the loan to either give them more cash, which means sometimes you're going to pay a little more interest during that period of time, but you're going to bridge the gap of your cash flow for a longer period of time. Or if you want the least amount of interest, then the loan adjusts to charge you less interest, but you may have to post more collateral to make it safer for us. So that's how we've made it simpler, is embedding those concepts in the loan calculator with 4 simple choices.
It seems like a lot of different people are working on similar projects to not like this specific model. There are some unique things, but is there interoperability with other platforms? Are there partnerships that you guys are exploring? Is this something where, have you worked with other companies before that are going to be helping you get to this next point?
Yeah, so we have a couple of things that we're doing. Right now we have a centralized platform, and that basically means that the databases are centralized, the information runs through us. We have certain requirements where we do what's called KYC, or know your customer requirements, and that's required by the government for us to really know who we're dealing with. And they're really more about making the platform safe and making sure that the bad people don't use the platform in terms of money laundering or those kind of things. So it's pretty much like a bank where we have to know who are we dealing with, but we're not a bank. So we're incorporating those features into a decentralized platform. And we've been working with a community called Komodo. And a lot of their core developers have been working on our project now for well over a year in developing a decentralized version of this platform. So that'll be coming out in different phases. First off, we will launch a decentralized exchange or a DEX. That'll be out in about 30 days. And then we will enhance that DEX with our lending platform so you can get a decentralized loan where other people on the platform are actually helping you with the liquidity. You provide the collateral, and then they provide the dollars. And then with our centralized platform, they kind of work together because sometimes, one of the big downfalls or liabilities or what's the other word? It's not a feature of a DEX is that it's hard to get back to actual dollars where you invest in your real world business with dollars. There's no such thing on a blockchain. There's no such thing as a dollar. So what we do is build that structure in so that you could go get liquidity from a DEX in the form of a stable coin, then bring that stable coin over, convert it, and get it into your bank account and fund your business with it. And then pay off your loan with that same funding and get converted back to a stable coin and then pay off whoever lent you the dollars on our decentralized platform.
Okay, and so you have your own stablecoin. Can you tell us a little bit about how that works? And more broadly, what is a stablecoin for somebody who's familiar? I mean, it sounds a little bit like what it is, but more specifically, like how do they function within the crypto space and why is that an important function for your platform?
So most cryptocurrencies have a certain amount of volatility where their value goes up and it goes down. And you don't want to give up the value of your potential upside in a cryptocurrency by selling it and using the dollars or whatever fiat currency you might get from selling it. So stablecoins have evolved to basically stand in place of fiat currency. And we have a stablecoin called SFUSD. And with that stablecoin, it acts as the dollar representative on our platform, both our centralized platform and our decentralized platform. And we do some unique things with it. It's actually a mineable stablecoin. And, probably won't go into the technical details here, but effectively, it functions as the dollar equivalent on all of our platforms, all of our exchanges. And for you as a customer, it means you can get to stability when you're ready to sell your cryptocurrency, get to stability and use it somewhere else. Or if you need a loan, you put up your cryptocurrency as collateral, and then you would receive SFUSD in its place. And then you can convert that into a dollar amount on our platform. And you always know that SFUSD is always worth $1. Guaranteed, you can redeem it anytime for $1.
How does that work with inflation, though, of the real US dollar? Is that in favor of the cryptocurrency user, or how does that play out?
Well, inflation is just a factor of pricing goods and services in the dollar. So if the US government has printed a lot of money and inflation ensues, which seems like it's happening now, you can see that things are more expensive than they used to be a few years ago. It doesn't change the value, quote unquote, of SFUSD. It still just has the purchasing power of $1. So if you wanted to hedge that inflationary aspect, you would actually go to a cryptocurrency and convert your values, which you can do on the platform as well. You can get to SFUSD when you need to buy something now, or you can convert it to, say, like SMTF, which has a deflationary aspect of it. It gets worth more over time because the supply is either constrained or issued on the basis of another fundamental, not just $1.
How do you stay in compliance, right? So I'm a regular user. I wouldn't say I'm a power user of crypto necessarily. Let's say I use Coinbase or something like that. I know that they're doing some stuff, but they also are this big behemoth, right? They've had all this time to establish those banking relationships. In New York, you have to have the BIT license. How do you guys manage something like that? Did you have to have, previous banking experience in order to make those kinds of things happen? Wouldn't a government say, why are you making a stable coin? I mean, they've looked at some of the stable coins with sort of, a stink eye. Like, is that something that how do you maintain compliance, basically?
So with the stablecoin, really it's about two things. One is there's banking relationships. You have to be able to convert the redemption of that stablecoin into an actual dollar. That's really the only way that you know that a stablecoin has value or has that value of a dollar. So what we do is we publish our bank account, which is, we don't know anybody else that does this, but we publish the balance of our bank account that is used as the redemption against our stablecoin. So you can see every hour our bank account updates on our website, see exactly how many dollars are in the bank account against how many coins are actually issued on our blockchain. So there's really not a sense of compliance in terms of like government regulations. What it's really about is believability and audit, being able to audit something. So other stable coins, they might audit their supply against their assets, say maybe once a month or maybe once every 6 months. And we've taken it a step further where every hour you could check to make sure that our bank account balance and our SFUSD supply is in balance.
Right. And that was one of the things I noticed in the white paper. There's sort of a yin and yang between the balance of the stable coin and then there's also the speculative token. Can you talk about the speculative token?
Yeah. Again, we do things just a little differently. Well, in some cases, a lot differently than other people. For example, our coin, our speculative coin, SMTF, it starts with safety. If you either mine Bitcoin or buy your Bitcoin, you're buying it at volatility, right? There is no fundamental behind Bitcoin other than it is a representation of its own unit of account. And that's in terms, if you were to price everything in Bitcoin, it would have stability, but that's not the way the world works. Everything is priced in dollars. Therefore, the price of Bitcoin goes up and down, and it could be very volatile. Our SMTF coin is priced in terms of our loan portfolio. So the more loans that we issue, the higher the price of the coin. So you have something to go back to and look at and say, hey, how many loans are they issuing? And what's the dollar denominated amount of that loan portfolio? Then you know exactly what the price of the coin and the demand for the coin in terms of loans is going to be. You have a forward price curve. And that may be a little jargony, but it's a fundamental that we implemented so that it resists bear market volatility. It has the ability to go up in value and it can go down, but because of the fundamental, it makes it less likely to go down. And because we have monetary policy, if the price of the coin goes down, we have tools to do something about that. We can actually make the coin worth more by either contracting the supply of the coin or decreasing the interest rates on our loans to increase our loan portfolio. Much different. There isn't really any coin out there that really does that in like a real kind of central banking type tool.
Well, do you run into any of the problems that you would run into with central banking, right? I mean, fractional reserve lending is a little bit kind of gotten us into some trouble.
Yeah, so we don't do fractional reserve lending. Yeah.
Okay.
And in fact,
so these would just be all collateralized loans, so there's no risk of that there.
Yeah, so when you think about this, if somebody comes to buy our coin and what they're doing is they're actually, the dollars that are being put into there, so let's say they bring Bitcoin, we actually sell the Bitcoin, market to the dollar amount that the coin is worth at the time. Those dollars are used to fund dollar term loans. Then we also collect interest on those loans. That goes into a reserve account. Then we also collect the collateral for the loans. So we're typically lending out anywhere from about 50 cents on the dollar to 70 cents on the dollar. So we're averaging about 60 cents on the dollar in terms of loans, which means for every dollar that we send out in a loan, it's backed on average about $2.30 in cryptocurrency. So it's just the opposite of fractional reserve lending. We have more collateral than we have obligations.
Okay, cool. So your team, I think, is a little bit more seasoned than the average crypto team. I think that you have a lot of business acumen among everybody that's really quite impressive. But you got into crypto 4 or 5 years ago, and I'm wondering, what have you learned in this process that you were surprised by? That you were like, this is totally different from any other business that I've done. Was there anything like that you guys learned along the way, or some kind of challenge that was unexpected?
Yeah, I think there were a couple, right? Which is what informed the design of our platform. In the beginning, we didn't have a platform. We were doing, we were basically engaging in derivatives with other hedge funds, other LPs. And the first thing that surprised us was kind of the impetus to our business model in the first place, is that the users of cryptocurrencies really didn't have the tools to take or address the risk in the future of the value of their assets going down. And that's really what we ended up doing, is we became a place where they would go to for safety. They would take the risk, bring it to us, and then we would provide dollar-denominated safety. That was a little surprising to me, because in, let's say, like the oil and gas business, where we had a substantial operating concern there, our big customers were Encana and Williams and large billion-dollar companies that had a lot of risk against future price of oil and gas. And there was a developed market where they could sell the future price of their output of their products and gain cash flow that would sustain them during a volatile period in the market. And there was nothing like that at the time. And so that was kind of surprising. So that's why we built up PowerBlock Coin, which was the precursor to SmartFi. But we only dealt with high net worth miners in China or other people that had a lot of cryptocurrency. And then we took that experience and now are making that user experience available on SmartFi. That was kind of one of the biggest surprises, in that other smaller people didn't have access to the same safety that the larger companies had. So that was the other reason why we built up SmartFi, so that smaller users of cryptocurrencies could access the safety that we build in these structures.
Okay. So I have a few more questions about SmartFi, but now that you mentioned the energy thing, this is sort of a relevant hot topic. Obviously, Elon Musk and all these other super rich new guys are coming in saying, we're going to teach you guys how to mine, and this has to be energy efficient. And I'm actually having Tom from your team come on to my podcast to talk a little bit more about nuclear energy, because I'm always kind of interested about how, the energy business works. Do you have any comments from your experiences about, is Bitcoin mining damaging to the environment? Like, do you have any comment on that?
Yeah, I mean, I think it's just a red herring, and it's a politically expedient opportunity for Elon Musk and others who, quote unquote, are green. I don't think that Elon Musk could categorize where the energy came from to power all of his cars that are out in the fleet. In fact, I'll bet if you watched, that most of that energy comes from coal-fired power plants, right? They're I think it's a little hypocritical, right? And so what I would say is this, is that if you also compared the use of electricity in the financial sector and the internet to what is used to generate the cryptocurrency networks, you would find that the banks are wildly inefficient and use far more electricity to process fewer transactions than Bitcoin does or Ethereum. And then also you would find that the use of electricity in the internet, if you made that same argument to tell people, hey, we need to shut down the internet because it uses too much electricity, I don't think you'd get the same kind of reception. Most people would say you're crazy. The value and the benefits of the internet far outweigh whatever electric consumption it produces. Should we become more efficient? Absolutely. Should we learn how to make the networks and the computation more efficient? Absolutely, and they are. You look at the power consumption of Bitcoin and Ethereum on scale as what it was compared a few years ago, and it's become far more efficient. In fact, we help fund companies who actually build more efficient chips for ASICs that go into Bitcoin miners. And the efficiency has been several orders from 5, 6, 7, 8 years ago to what it is now. They used to use 16 nanometer technology, and in fact even 32 nanometer technology years ago, and now it's down to about 7 nanometer, which is far more efficient. Now, are we going to get more gains out of that? Probably not. We're about as efficient as we can be with that silicon chip technology, but it's gotten better, and it's going to get better as we utilize other better structures, such as merge mining, which means you use the same hash rate twice to secure 2 different networks. Immediately, you just doubled your efficiency for electric use.
Okay, wow, that's definitely
I don't know
interesting.
if that was too jargony, but
No, but I mean, it gives a little carrot. It sets us up for another time to kind of dive into that a little bit more.
Yeah.
I've been really impressed with the team that you guys have, and something that we talked about was maybe doing a proof of love episode just because of your leadership, and I think that you kind of try and incorporate, I don't know, just a little bit more of a thoughtful approach. What would you say are the values of the team more broadly? Do you think that everybody's pretty much, libertarian? Like, is it, a mix of different stuff? Because different things motivate different people in the crypto space. What would you say what are some of the motivating themes that go on throughout the SmartFi team and your aspirations?
First off, I would say that, money's not everything in life, right? It's up there next to oxygen. If you don't have it, it's hard to live, but it's not everything. And we believe in a structure that puts everybody in the same boat, rowing in the same direction. I'll give you an example. One of the things we did as a company just last week is all of our shareholders voted to convert our stock to our cryptocurrency so that we are directly aligned with the people who are buying our tokens. Our best interest is their best interest. And I think that that's, something that people should look for in a core value of a company, is that do they participate at the same level as everybody else, or is there some kind of unlevel playing field? I think when you look at Wall Street and you look at, the banks, they get favoritism both from the governance of our country and from the economics of the central bank, and just from the system as a whole. And we saw that firsthand, probably over a decade ago. We were thinking about doing a public offering with our company, both when we owned an oil and gas business and the nuclear side of our business. And we kind of saw the underexposed side where it's a racket. The people who write those offerings for IPOs, for stock, the banks, and the investment shops, they're guaranteed virtually to make money. They take zero risk. So they're not your friend when it comes to selling you stock. They've already bought the stock at far lower prices, and they're selling it to you at a higher marked up price. And they're basically ripping people off. From that perspective. Now, that's not all of them, but there are a massive amount of those stocks that come out and other investment instruments that come out that they're being promoted, and you're not getting that asset like the company would or like the investment bank would under the same basis. So we looked at that and said, we're not going to do that. So anybody can buy our coin on the same basis that everybody else would be able to get it to. There's not some giant pre-sale where all the coins get sold out all at once. They're going to be bought over time as they gain value. Other people can buy into them. And the other thing that we'll do is let's say you buy our coin and you hold it for a year. And if the coin doesn't perform the way that you think it should, bring it back to us and I'll give you exactly the money that you paid for it. I'll give it back to you. Right? That's, again, a little different. We start with security in what we do, not risk. And I think that's a different approach.
How is that sustainable? How can you offer something like that? That sounds a little bit like, too good to be true. Too good to be true, right?
Yeah. Yeah. So the way that it works is this. We don't spend money on developing technology. We've already built it all. We've invested millions and millions of dollars to build a platform already. So when you're buying our token, it's not so that we can take your money and go build out some system somewhere and hopefully it works. We built it out first. We put all of our money at risk first. Second is because we start with a hedge, or we start with safety. The way that our structure works and the fundamentals of our structure work is that if the coin is going down in price, that typically means our loan portfolio is not being utilized, and so we have excess cash on hand. And as long as we're selling the coin at the same ratio as developed by the loan portfolio, means there's always cash available to buy back the coin. If your cash isn't being used in our structure, come get it back if you want it. It's very simple. It's again, we have to be very careful. It's not a bank. This is not a bank, but it has a bank-like cash flows. And it means when you go to a bank and you deposit your money into the bank, you should be able to go back and get it 10 years from now. Well, the changes that we made in cryptocurrency and the way that we approach it, it's the same thing. A year after you bought it, and 10 years after you bought it, if you don't like it, come back and I'll give you your money back. Because if the coin isn't producing or isn't gaining in value, it means that we have excess cash in the portfolio and you can come back and get it. It's that simple. It's not, crazy math or some algorithmic, oddity. It's just this structure. It's bank-like, but it's not a bank.
Okay. And can anybody sign up? What if they don't have KYC stuff? Can they do the DeFi solution once that's ready?
Yeah, absolutely. Yep.
Okay.
Because on the DeFi solution, KYC is not required because we're not trading assets like dollars, right? On the centralized version, you're coming in, you're either bringing dollars and buying the coin with dollars, or we're converting it to dollars there. But on the decentralized version, we're using cryptocurrencies. So you can do it there. You can have a decentralized version or you can have a centralized version.
Okay. What's the community like with SmartFi? And maybe if you're still growing it, where do you want it to be? Is there a culture that you're looking to foster? Is there something that's people have in common among the SmartFi community, or is it just everybody?
So the people that we want to hold our cryptocurrency are people that we feel like are accountable to each other. I mean, that's as simple as it gets, right? That the only reason that governments have the opportunity to take power is because one person has not been equally treated by another person. And so governments then feel like it's their duty to step in and try to socially engineer with laws or social engineer a structure either through finance or through force, this equal treatment of each other. And we don't think that that's not necessary. Now there is, I'm not a believer in, anarchy. In fact, I was a legislator before, that. I was an elected official for 5 years. And I saw my purpose and my goal as a legislator was to protect the rights of everybody that I represented. And I think if everybody had that same approach, where they protected the rights of other people and treated them equally, a lot of the problems of society go away. And those are the people that we want to use, want to have use of our cryptocurrency and be part of our platform and contribute, not just take from the value that's created, but contribute with ideas. And in fact, what we do when you hold SMTF, you actually get to vote on the monetary policy. So we are accountable to each other. And if the coin is not performing the way that we think it should, we have tools to help boost the performance of the coin. It resists bear market volatility, but we all have to agree and vote to move the cryptocurrency through contractionary or expansionary policy to make sure that the currency is doing what it's supposed to, that the performance on the network is doing what it's supposed to, and that everybody participates in that way. That's kind of the people that we want to be involved in.
Great. So what's going on in the future? What are you excited about? And do you think you guys are going to start doing NFT tokens or anything weird, or is it just going to stay in the financial world?
Well, so some of the companies that we help fund have actually approached us and said, gosh, we have these tokens. We want to put them on an exchange. Sometimes it's hard to get Coinbase to look at your token or to get, some other exchange to look at your token. So we actually are implementing something that's sort of like a marketplace. This company in particular has a token that you can buy private jet hours. Not everybody's a consumer of private jet hours, but at least it's an example of what we're doing. So we'll be listing their token on our exchange, and they will be using the platform as kind of a clearinghouse to help them structure hedges and buy safety, so that when somebody uses Bitcoin to buy their jet time, Bitcoin goes up and down in value. They're going to be able to immediately liquidate their Bitcoin or hold a certain amount of it for speculation, depending on what they want to do. So they could 100% hedge it, 50% hedge it, 25% hedge it, whatever the exposure they want. But they'll be able to do that on one platform, all in one place, and have their token available to be traded on our exchange. And really what they're doing is they're saying, hey, come to SmartFi, buy your private jet hours, and then hedge that with either dollars or Bitcoin or Ethereum or however you want to do that. And that's kind of a service that we see as our exchange isn't some massive profit generating center like Coinbase or Binance or something. It's something that's there just because we need to facilitate the transactions for our loans. Our loans are really what matters. That's the fundamental thing that we do. Our exchange is just there as kind of an ancillary service. It's not how we try to gouge people to make money, right? So over time, it's new, and we want the exchange fees to come down and become lower and lower. And in some cases, like our decentralized exchange, it should get really cheap. And in some cases, like for SFUSD and SMTF, we actually don't charge a fee to trade our coins on our exchange. No fees. That's a big, that's the other kind of thing that we like to promote, is that cryptocurrency should be used like, just like you were using cash. When you go to the store to buy a Big Mac or whatever you're going to buy, or, pick your favorite item, they don't ever say it's $10. And oh, by the way, we're going to charge you, $10.05 for a transaction fee.
Right.
That's not the way
you don't want to know
really
all that extra stuff. Yeah, exactly.
Yeah. And so really what we've designed it so that when you get SFUSD or SMTF, that the fees on our exchange are either zero or they're only fees that other networks charge you, right? We don't charge anything extra. For example, our SMTF coin is on the Binance Smart Chain coin, right? It's a BEP20 coin. We don't have any control over the fees that Binance charges for it, but we are not going to charge you any fees to trade it on our exchange. Same with SFUSD. In fact, on SFUSD, that's our blockchain. And what we'll do is there is a security fee that's charged, but we rebate that back to you so that there's never a fee to use our stablecoin. So if it's worth $1, you get $1's worth of whatever you're going to buy or however you're going to trade that on our platform.
What's going on with your customer service? Because I feel like if you want grandma to use the platform, and that's kind of my hope for SmartFi, and for a lot of different crypto companies, right? Like, how can you make that process easy for people as you scale upward? Is that going to be something that you guys are prioritizing? Is this going to be like an automated thing? Like, how do you manage the many people that are like, I lost my money? Like, and that would be me. Not even a grandma. Just I mean, I could barely sign into things half the time. So is there some support mechanism there?
Yeah, and I early on with our platform and with our process, everything we did was high net worth clients, that had a lot of money, so we could spend the time with them personally and talk them through the process, help them work through these kind of things, and basically consult them and become like trusted advisors for them. It's not really possible for a platform that is, it's got, we hope, millions of customers on there. But what you have to do is design the experience to be simple in the first place. So that's the first place that we start, is really design our products around simplicity, usability, and user experience. The second part is when you have a cryptocurrency that's designed without fees, that doesn't charge you anything and is stable, basically you have a lot less issues, right? And so what we see is our customer empowerment department, and we kind of think of customer service that way. We're trying to empower people, and that's why it's called the customer empowerment department. But we're trying to empower people to gain the information that they need to make their own decisions and not have to wait on somebody to call them back or email them back. So when you go to our knowledge base, there are sufficient and even what I would say are expounded articles about how to actually engage in currencies and cryptocurrencies, even fiat currencies. What do they have to do in order to get their bank wire to be deposited on time, or ACH? These are, people don't realize that a lot of the problems related to the platforms is actually the fiat world and the banking system. So we expound a little bit more about that on our knowledge-based articles, but also having a recovery processes so that you can recover your own password and recover your own systems. And one of the things we really encourage our users to do is actually KYC to level 3, which means you're going to provide us with an ID. But let's say for some reason you lost all your passwords, lost your phone, didn't have any way to actually gain access to your account again. If you're KYC level 3, we actually have your picture and your ID on file. So you can actually make a phone call and actually get a video conference like this, and somebody will answer that and unlock your account for you and recover everything for you so you're not locked out. But that takes a little bit more time.
So I don't mean to be rude, but how does somebody know that they can trust you? How does somebody know they could trust your company or any of these crypto companies? How do we know that you're not going to run away with it?
Yeah, that's a good question.
I think that's a good question for any person, especially if they're new to crypto. Is there insurance? It's not the same thing like putting it into a bank, and maybe banks are also insolvent at times. Can you talk about how do you build trust with a company like SmartFi or any crypto company?
Yeah, I mean, it's really about disclosure, right? Risk is when you don't have adequate information about somebody's reserves, like we talked about. So when we're publishing our bank account balance on an hourly basis for our stablecoin, it's pretty certain that it's worth what it's going to be worth, and there's no reason for us to run away or do something, right? Also, we're registered with FinCEN, which is the Financial Crimes Enforcement Network that the U.S. Treasury runs. So we're registered as an MSB or money services business. Also, we have licenses. In some places, we don't need licenses, like in the state of Utah, but we go through and apply for licenses. We're bonded in different states, and so we comply with state regulations, and they have some place to go to complain, right? We can't just disappear. We're real people. Somebody can call us up, or they can, get in touch with us. So it's not like, a lot of DeFi platforms, again, the value in what they do is innovating around technology, but sometimes that technology enables them to actually do things like take assets, right, without giving the customer the assets back, right? Or you can't really get a hold of somebody at a DeFi platform. So we're trying to combine the best of both worlds, the best of the physical world with the crypto world and decentralization. So that's why we have two separate platforms. If you want something that has a real world feel and simplicity, you've got the Smart Portal, which is centralized. But if you want something that is decentralized and you trust cryptocurrency technology more, we have a decentralized exchange, which is actually its own wallet. So we kind of have both. You pick.
I like that. I like the Komodo team, so I'm happy to hear that they're working on it. Very respected, and we're actually doing an event here in late August, so hopefully we'll see the SmartFi team here as well down in Miami. Any final kind of message that you want to give to the audience before we sign off here on the Tatiana Show? I mean, could people just go to the website and start signing up? Like, is there anything they should be keeping an eye out for?
Yeah, so I think, the biggest message that we would convey is this, is that, we're motivated by ideology, which is, treating people equitably, right? And we want people who also have that kind of same view that people are smart enough to engage in these tools. They may need more education, right? And that's what we're here to do. We're here to help them, make them simpler, but also engage in the tools to help kind of create the wealth that they're looking for that might normally occur or accrue with traditional banks or Wall Street or those kind of guys, right? So we've kind of disintermediated that structure. And that we've been around a long time, right? We're not some brand new business that's just spawned out of some guy's garage. We've done over $1 billion in cryptocurrency transactions. Our company has been around in one form or another since 2007. We have the guys on our boards have been either elected officials, executives at energy companies, or appointed. One of our board members was appointed by President Clinton and then made the chairman of the Nuclear Regulatory Commission by President Bush. And he governed that agency for 10 years, oversaw everything nuclear in the U.S. So we're not brand new, right? We've got some gray hair, I guess. In some ways that's unfortunate, but in some ways that's the good news, right? So we're not a bunch of 20-year-old somethings that built some software in some guy's garage.
Yeah, I also would concur that I think that the values at the company have been really exemplary, and I think everybody's been really nice. And it's just really hard to find in the cryptocurrency space. I use some of the larger companies, but I'm really looking for competition, and I think that they have some coming up in SmartFi. So congratulations on a beautiful project. I'm looking forward to more of the announcements. People can sign up online, and they can go to all the links down below. Thank you, Aaron, for joining us on the Tatiana Show. And I hope to see you on Proof of Love soon so we could talk a little bit more about management styles that are maybe a little bit more conscious than others.
Yeah. Just
Excellent.
Invite us. We'll be there. We'll make it happen.
That sounds good. Great. Thank you so much. We'll see you guys next time on the Tatiana Show.
The Tatiana Show has been brought to you by CryptoMediaHub.com, a boutique marketing and PR agency for Bitcoin and beyond. What's the point of all this technology without a little love in our lives? Our hosts, Tatiana Moroz and Lauren Kasovitz, have come together to bring you Proof of Love. Go to proofoflovecast.com. Hey there, it's time for the show, the Tatiana Show, where you make friends and talk life and crypto. We gotta think and reflect and use lots of intellect with our hearts when we work together. I know that it can be so hard out there, looking all around and saying that life ain't fair. So that is why we will fight and stay up late at night, listening to the Tatiana Show. Thank you for listening to the Tatiana Show. Please follow us on Twitter at Queen Tatiana or on Facebook and Instagram at Tatiana Moroz Music. More episodes can be found at thetatianashow.com, and make sure you leave a review on iTunes and tell your friends. You are listening to The Tatiana Show. This show may contain adult content, language, and humor and is intended for mature audiences. If that's not you, please stop listening. Nothing you hear on The Tatiana Show is intended as financial advice, legal advice, or really anything other than entertainment. Take everything you hear with a grain of salt. Oh, and if you're listening to us on an affiliate network, the ideas and views expressed on this show are not necessarily those of the network that you're listening on or of any sponsors or any affiliate products you may hear about on this show.